All right, trading the foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before deciding to invest in the foreign exchange, you should carefully consider your investment objective, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of the risks associated with the foreign exchange, trade, and seek advice from an independent financial advisor if you have any doubts. Again, this is Friday, November 20th. We're going to be going to about 9:30 this morning. It is Open Mic Fridays. Anyone who has a mic, we encourage you to do so. Bring it, put it on, and talk to us. This is a live trading room. It's for educational purposes only. No financial advice or recommendation will be provided. Any trade taken during this live session is not a recommendation or a suggestion that you should also do the same. Past performance is not indicative of future results. Do not trade money that you cannot afford to lose before trading live. Always operate with a written trade plan that identifies the rules for entries, exits, targets, and risk management. And with that, we'll go to the charts. We had an alert. Actually, we just got an alert just now as we speak. US yen. Let's take a look at that one since everything else seems to be pretty much out of the chutes here. And that was the US yen at 8 o'clock. Let me go to my 15-minute chart. We'll
Excuse
blow
me,
that
Al.
up. And we got,
Ava's on the attendees. I don't know if you want to switch her.
oh, let me do that. Let me get over to that and let me find my list of attendees here. Here we are. We'll bring Ava over. And there we go. And it is a US yen ascending 8 o'clock. Over here at the US yen, 8 o'clock ascending. So it's going to be going from low to high. So right now, this is what I'm seeing right now. We have the overnight high. Here's the overnight low. Let's start from the low, take it up to the overnight high, bring it down to as close as we can to where the alert was. That was at 8 o'clock. That was this candle right here. Take it on up to the top here. And here's our alert. The blue candle that's forming right now as we speak is the alert candle. Let's go and mark our time frame here. 8 o'clock, and we have, there's a pivot low. I'm going to bring this thing down a little bit here so we can, this way, this is the wedge now, which is the active candle. We do have a little bit of a slope coming down. I'm looking in here at the, right now I'm going to be looking at the RSIs and just see where they're at. Right now, they're pretty much right in the middle. Ideally, we like to see a pullback up to around the 75% of the 8 period, which is the orange one, or the 7 or 25 of the 8, or the 75 of the orange one. Right now, it's neither one is to the extreme. So right now, we're kind of right in the middle of things. So what we're really going to be doing is we're looking to see if it gets up into this, if this thing can get up into that 75% area, we may be looking at taking it short. And this, right, if you see this right here at the top where you have the 30-minute 62 moving average. If we put our moving averages on this one, let's see where we see that everything is in the correct direction to go short, but they also see where it's starting to, the 5 and the 13 are starting to cycle around each other. So this thing could start breaking to the upside, but right now I'm just seeing it somewhat range bound. We had a high, a low, a lower high, a higher low, lower high, still lower highs, higher lows. So if we were to take a secondary look at this, I see this high here, see this low. Here's where the alert was. I actually caught this one before it had a chance to really break out. Oftentimes these things start breaking out pretty much right when they get the alert. So we're going to be taking a look at that area right now. Go to our lower time frame. Let's take a look at our 1-minute chart and see if we can see something over here. And the rest of it has a nice little, this is a three wave up. Here's a pullback. And let's see here. We had a low here. If we put a line right across from this low before the wedge, we can see we had a low, we have a little bit higher low. So this tells me that this thing may have had the pullback. This is the wedge alert. I would say this thing's probably going to be looking at having this thing breaking to the upside. This would have been a nicer area right here when we, 1 minute ago, right when we got the alert. We already had these are already down here at the 75 area, which is what we were talking about. Now we're basically just looking for pullbacks and see if this thing can break to the to the top of this. It's starting to make a lower high, higher low again. Let me just move this over here a little bit more. I'd be looking at this thing to break to the upside. It seems like we have some upward pressure. Let me just go and draw this. Redraw this since the other one's way over there. This is pretty much like an equal high. So I'd like to see, I want to see it break the top of this area. You see, it's forming almost like a small little wedge right here. We have a nice strong move up, break. If this thing breaks the upside, I would say that would be a good entry to try and catch it right before it came on up. We're still actually inside the bigger overall picture of the wedge. We do have some momentum coming to the upside. We have a high. Yeah, actually, right here, this was a little bit of a see this little bit of an M and an M pattern right in this area. And so I'd be seeing that we're still looking at that. I want to take it over to this area to show the difference here. Here is a pivot low. You see that after it came down nice, this was a nice little area where it was rejected. And I'd be looking at to come on up to reject this area. The area up here at the top is where the bigger wedge was, but here's where the alert area is. We have the moving averages are moving in the right direction. We have the green, yellow, white. Check the moving averages on our 5 minute. And we have the 30 up at the top, which is right now I'll be looking at our target area. I'm not sure if there's enough room to take this trade or not. We have it, if it took the trade right from the price where it is right now, that's at 85 to 81. So that's only 4 pips. I wouldn't take that trade because you're probably going to be looking at a bounce off of I would say this would not be a good trade to take. Just not enough room, not enough of a range on it. That's only 3 pips right there on the U.S. yen. You're only looking at a penny a pip is what it is on the price. So I would have to stay away from this one right now. There's not enough range to make it worthwhile taking the trade. If it came back down and retested this area, then you might have a little bit of something. Right now, that's pretty much the range that it's trading in. I'd like to see a breakout of this little box right here before we take it. But you don't have much room to the downside. If it comes down to and rejects the bottom, then maybe you have some room to the up. But I like to see this start pulling back a little bit. Here was probably the better area to it, but we didn't have the alert at this point in time. But this is the area where I'd be looking for a target zone. If it comes down into the bottom of this wedge, we might have a nice little target to be able to take it long off the rejection of the bottom. Let's see. There's my box down here. So right now I'm just not seeing much for. This would be a enter to sell. And that's about all I can say about that. I said there just isn't enough room for me. I don't want to be taking this trade inside of here. At the best, be looking at trying to catch the extremes to go short or the bottom to go long until we actually get the breakout. If this thing can break out at the top, then you might have a little bit something to the upside. Looking at a higher time frame, you're still looking at will break the overnight high, which would be right over in here. If it can break that, or if it comes up to close above here, then you might have a little shot at this.
Al, Beach
Yes.
Panda would like to say, looks like looks like a lot of accumulation, but who am I? I don't have the same eyes to see that Al does. At least not yet. LOL.
Well, yeah, it is. It looks like it's just sort of basing in here. I mean, it's when you're down on the 5 minute. When you look, I like looking at these higher time frames. I've been looking at these more and more all the time. If you look and see what the higher time frame is, let's go to like a 1 hour chart, or just see what the daily how it's trading during the day. You can see that this was yesterday's range. So the whole range from here yesterday, and I've been doing more and more of this, is looking to see how it looks from a daily perspective and seeing what the price action is of that daily range. So here's the daily range from yesterday. And so you can see it's right now, it's this wedge is right in the bottom part of this range. The day before, and this was basically a bearish candle. From a daily perspective. This was a bearish candle. And right now it started up over here. The whole part of this from the open of the daily open yesterday. It opened, it went high, it went low. It formed a slow first, went up high. Now this part up above is actually your what this candle looked like. It was actually a red candle which had a strong wick up, rejection, came back down again. And right now it's basing here. I'd be looking at more to the downside, but if you also look and see from the day before, maybe go and do this again. Come over here from the day before. Here is the low from before, the day's low, right in here. And the open was up here. So the candle before that was basically, it was pretty much an entirely bearish candle. And then it opened up. Here's the high, here's the low, and it closed lower. This one was lower, closed up, wicked up higher, but came down. So this is basically just a single wick. If you look at this from a daily perspective, in this range, if you put this on like a 4-hour chart, or say 1 hour chart, this one 1 hour. Let's go with a 4-hour chart. See how this wick just wicked right on up like that. So basically, it pulled up, rejected, came back down. So right now, it's really trading inside of this range right here. This is a range, but it's at the bottom of the range. So now the question is it going to break down lower to come down to break the bottom of this range to go lower, which has a lot of room to the downside from this strong move up? This could be a possible target in the long run, not necessarily today, but this is basically where you would consider this was the nearest significant low, and this was from all the way back in November 8th. So I'd be putting this as a strong demand zone. If it breaks out the bottom today, where it's at the bottom, if it breaks out, we could be looking at going lower, which is going to be giving us the yen strength, which would help support with the fact that if there's a flight to safety for the currencies, the Japanese yen is one that's oftentimes considered to be the flight to safety. So there's more room to, if it breaks, there's a lot of room to the downside. But right now it's trading inside this, it's at the bottom of this 3-day range. So that's why if it does break the wedge down here, it could be looking at this as a top target. Let's see, try and get the, so to the upside, I'd be looking at this as being the target to the upside. Where's my target? There we go. So that's pretty much what we're looking at. So now the question is, what's it going to do? We'll just have to wait and see, I suppose. Go back to our 15-minute chart and see what it's doing. And I said we have our rejection. We had the rejection of the 30-minute 62 over here overnight. And so right now it's pretty much just basing, it's making just lower highs and higher lows as it's spooling up, and then eventually it's going to break. And then if it breaks, it's probably going to break hard. What I've been seeing a lot of times with the pricing is that when it breaks really hard, makes everybody think it's going to go short. And then all it does is finds those buyers down here and then just starts to rocket on up again. So a lot of times you get a really strong move in the opposite direction first of where it's going to go. So keep that in mind when you start seeing these trades develop. But right now, I would say I'd be looking at this thing more likely to go short at the moment, with a rejection up at the top here as opposed to a breakout to the top. Any questions, comments?
I'm good.
Good. Any more alerts? Anything? Anybody see anything?
There was a 7 o'clock
There was a
ascending wedge
there was
US
a
CAD.
there was a 7. Yeah, in fact, we got an alert here, I believe. On that, this is a harmonic pattern that we have been often showing. Now with the US CAD, this harmonic pattern is basically saying that it's going to. This was the entry down here where the D is. Look at an entry of $1 30.47. We go to the US CAD chart, 30.47. Let's see, where was that? That would be 47, which would be right about in this area right here. This is where, and this is right where the C is right now. So this thing pretty much entered where the target's the buy area was off that harmonic. So if that's the case, we did have we have a little bit of a divergence coming in from this A to the C. You can see where they have this is at the extreme risk rate at the 75. It came back, made a lower low, and now it's starting to break to the upside. I say if this thing's going to go, we're looking at probably this. I think it's very possible this thing could break to the upside. Here is the alert. It's not ready to break out of the top yet. We do have some room up to the 30-minute 62, which is oftentimes our target. There's still 11 pips to that side, to there. But right now, it's not quite ready to. I'm going to bring this on over. Right now, we have a high, a low, a lower high, a higher low. Now, if it can break up to the top of this, we may have a shot at this target right up in here. And that would correspond with the nice move down that we had. This is the origin of the move. I'd be looking at this as being the target zone, which correlates with the 30-minute 62. I'll just wait and see if this thing can break. It had a little bit of a head fake up here. This is where we oftentimes get ourselves into trouble. We have this tucked in all the way down here. It breaks, comes back up. Then our fill just gets to the point where it comes up. We think it's going to be taken off, and then just reverses it back on us. From here to here, that would have been our, basically we've only had our 5 pips on that. So right now I'm just looking at it's just ranging inside this wedge. if we had the alert and we can come back down and get these RSIs down here to the 75 range and then get a hook back, that might be a good entry. If this area down here holds and doesn't break to the downside, it just wicks us down, then that would be a possible entry to go and take it long. This would be pretty much this was the area where the harmonic was saying to take it long. Right here it formed the D, pulled back up. Now it's retesting the D, and this would be the entry. If it comes back and retests the D area, stop would be somewhere around the 30, 34 area. This is on the Canadian.
That's a large stop.
It is. That one has a lot larger stops than what, but you see where, if you look at it, this is probably all the way over here from, where did that was the stop. Okay, that stop is from, so it's not using these precision entries like we're using, but it is something to consider as it comes down. We're looking for that precision entry for the wedge for it to break. This is the area where the trap would be off of this harmonic.
Thank you.
I would not give it that much, but if you're trading 2% of your account, you're not going to be using that large of a stop. If you're gauging a 5-pip stop, this is no, it's 14. That's 14 pips, so that's it's a little bit more than what we would normally use. But if you can get it, if it comes down into this area, into this trap area, and then rejects, comes back out of it again, then there might be a possibility of a little bit better entry. Here's our fib line.
Beach Panda has a comment on the last chart.
Okay, on the which one?
JPY.
The JPY.
USD JPY.
Okay, what's
Sorry,
the
switcher. USD JPY 5-minute wicks look like there are a lot of sellers, but it's still just ranging.
5 minute? Yeah, it's yeah, it's pretty wicky right in through here. Yeah, I agree with that. It's basically just making a space right now. The more it coils up, the tighter and tighter it gets, usually the harder it's going to break, and then usually the longer it goes sideways. What it's doing is just picking up a whole lot of orders in here, and then when it breaks, it's probably going to break with a lot more strength. So I just be patient on this one. And if it does, here's where we had the overnight. Was that the overnight low? Where was the overnight low here? Actually, it opened up all the way down here. This is where it opened for this is the new day right here. Here was pretty much the open. Here is the low before. This would probably be a target zone. Let me see how much room we have here on this. If it breaks the bottom of the wedge, that's only 3 pips. That's why I like this more of a trap area. And looking at this, I would take this to maybe this candle right here. If it breaks, comes on down, and it would have to break pretty hard before, and it's going to then you have to figure out what your target's going to be. And here's the previous day's low right through here. So I would not take this thing short. If it breaks to I think it's probably more likely to break to the upside first. Let's take a look at that Aussie. That Canadian dollar that was starting to come down in here into this area. Let's check this one out here. Here is the alert. Here is the low. I'll log this area just for reference. And we'll keep an eye on that JPY. I'll put that on another screen here so I can keep an eye on it. Looks like we're missing Matt today.
Yeah, seems to be. I'm kind of looking at the EuroCAD here, just based on the RCS. But it looks like it's already been making its move from the wedge it was forming.
We are showing Canadian strength on this US CAD. We're showing Canadian strength on the all three time frames. That'd be looking for a short. But we're also getting down into this area. One thing I really want to be careful about is that from the higher time frame, from the daily perspective, this is the, you see yesterday on this 3-hour chart, we had a nice strong move down and it got rejected right down in this area. And now it came back down, retesting this. So there were some buyers in this area right in here. I kind of like this. Well, this is pretty much at the end of this wick. So if it can come into this area and get rejected, then we may have some room to the upside. If it breaks this area, then we're looking at coming down a little bit close, down a little bit lower.
There's Matt. Morning, Matt.
You have to go to the principal's office and pick up your tardy slip.
Detention.
So the US CAD, let me see what that looks like on another chart here. I'd say the US CAD's looking to, it's not ready to break out to the upside yet, in my opinion. I would be still looking at this thing being a little bit range bound. If it does come up, if we can get an earlier, right now the moving averages are showing the 62, the 13.5. Right now, this on the 15-minute chart, it's showing where it's starting to cross over, where the 5 and the 13 are starting to cross over. So there is a bit of a rejection. This is a little bit of a lower. If you were to take this thing long right now, you could have a fairly tight stop as you have a lower low, but now we just got the rejection. If it breaks to the top here, you could probably maybe take a trade on this one. Looks like it's moving to the upside. And from that'd be 30.62 to the, you could get your 7 pips out of this one to that target, but it's probably going to be, it probably get a bit of a bounce off of the 15-minute 62. Not a real great trade. You could probably get a few pips out of it if you were in mind to try and do so. That's a slight, no, it is somewhat of a channel in here. And never really did, the RSIs never really did get down off of the A and the C. It never really did get down to where I would call that that zone that we like to get. It's the strong enough pullback. You did get it with the 3 period on in both accounts. And right now the 3 is the blue one is leading the orange one, but now it's right back in the middle. So this is not a, I wouldn't consider this to be a high probability trade right here where it is right now. It's still kind of basing, it's still coiling up, still getting lower highs and higher lows. I'd like to see a nice strong push down. I would say expect possibly a nice strong push down, get rejected, and then have to break to the upside, giving us a little bit more room to our target zone. The more this thing keeps making lower highs, the more room you have to get to that target. But right now, I just see it going sideways with a very narrow range. And if you look at the range of this thing, as it gets smaller and smaller, you only have 10 pips. This is that's a big candle right there. Yeah. This could be that real strong move down. I say oftentimes you get a really strong move down only to get rejected. And then what it does, it gets everybody sucked in to start taking it short. and then they go and they take your stops and keep on going. I'm not looking as this to break. I'm not looking for this to break out of the bottom right now.
Should we move on to the Aussie US?
We could do that. Let's see the Aussie US. This is doing this pretty much the same type of scenario. Strong move up on the 5th. That's on the 5-minute. We did get the break of our trend line. We did have I did draw a higher time frame trend line. We did get the break to the upside. But now one thing about this was right up into a higher time frame supply zone. As I put this one on, as I drew this one out this morning, I was looking at where was the higher time frame? I'll look with a 3-hour chart. And you can see a couple of days back, this was a high. It had here was the open, strong candle up with rejection, closed down lower. So there's a drop, here's the base. Here's another drop, came back up, it's retesting this right now. And you have a wick here. So you have a little bit of a trend, higher trend from this point. I find a lot of these markets are really kind of range bound in a lot of ways. And here's your trend line. This might, if it comes up into our supply, this could be a trap. And then you get the rejection. And again, there wasn't a lot of room, I don't believe, from time, well, at least when I saw this. Here was the alert. We got the alert at the open of this candle. Now, if you were to just take it straight up, that's a nice little move. But if you have to wait until this 15-minute candle closes, you don't have a lot of extra room here. It just pretty much drove right on up, came up into this supply area, have a rejection. Now the question is it going to come back up and retest this? It never really did quite get up into this area. And I'd be looking at this to be an area to take it short more so than long, just based on the price action from the last couple of days. Here's a high, here's a low, here's a lower high, lower low. So this is trending. Now it's coming back up to retest this area. And then you might have room to the downside from looking at this area from where this was rejected. So this is where we get ourselves into trouble when we start seeing, because basically, like I said before, is that as it's trending, it's also going sideways at a higher time frame. So right now, it seems to be trading inside for the last couple of days. This is our area where the buyers are coming in. Here's where the sellers are coming in. And the question is there enough room to take the trade? I'm on a 3-hour chart. You can see how this is the open of this candle. So there was the open. I found some buyers down in this area. Came back up. Here was the from the open. Here's the high. Strong move up. Came back down. This was basically a candle that was closed green, and then here is closed. Here was the open, and it closed red yesterday. And now it's coming up to retest this. It's basically retesting this whole area up in here. But it's really has a lower high, a low, lower high, higher lows. Here's your trend right here.
Excuse me, guys. There seems to be a lot of background noise coming from somewhere.
Yeah.
On?
Someone's TV's on.
Yeah.
Yeah, someone's TV's on.
It's gone now.
Okay. Pedro, you have a question, I see, or was that already asked? If you type the question in either turn the mic on or type your question in the box, in the question answer box.
Holy smokes. That's a huge 4-hour wedge on Aussie US. A very, very compliant 4-hour wedge. And it's almost the same wedge as you have on your your 3 hour. Just back it up a little bit. You got a flat top, or you can make it in that direction too.
So what are you saying? Are you saying that this is a valid supply zone to take it short, or what are you saying?
Potentially, yeah, that's a third hit on that trend line.
Mhm.
That could be a very, very, very nice trade.
I'd like to see it get up into that area.
Oh yeah, no, it would have to bounce off there, and it's not a if and or but. It has to. If you want it, if a person needs to take that trade, it needs to bounce off that trend line. Because there's two scenarios. I can share my screen
Okay.
to give you two scenarios of what could happen on Aussie US.
Okay, go ahead.
Okay,
I'll stop sharing.
let's do that. We are very, very close to something interesting. Let's do this. All right. Scenario number one. This wedge formation right here. So top, top, maybe top. Okay. Or bottom, bottom. I never stretched it out, so I don't know. But anyway, I didn't neither did I line it up properly, but so we got that. This bottom trend line, not good to go yet. But it looks good. Just the overall formation, you know, you got your big run up, and then you got your big corrective move, and then whatever's going to happen is going to happen in the next little bit. It's either going to bounce and reject here, which we might have missed that part, but then if it breaks the bottom here, then you might have a very nice trade. This is only 50 pips. You only got another 50 pips to the bottom of this trend line. And if it breaks that, this is beautiful.
Where's the target if it breaks it?
Oh, let's not talk about target. I mean, it could be. This is what, 150 pips? I didn't measure it. Yeah, 125 pips. That could be 125 pips. Or it could be 125 pips to the upside. You mean, you could just take a small piece of that move up. So it depends what's going to happen here. If we're going to have something break in the next little bit. Now, remember our tool that we were talking about, Al, on so there's a tool. Yeah, Fibbo time. Let's throw something in there. So with the intersection of the wedge, where the two lines intersect, you can put 100%. And this right here has a setting of 75. So generally, by the mark of 75, it's going to break out before that. So it's priming itself up, and it's getting ready to do something fun. I'd like to see this on a lower time frame though.
What if you take that timeline, start from the smaller wedge you have in there?
Oh, okay, that's valid. Let's do that. So you're saying from here to there?
Yeah. From there, yeah, from there to the peak of that smaller wedge. From there to the about where your red line is, to the peak where your red line is.
Where my red line? Oh, I know what you mean. So you mean here instead?
Well, I'm talking about moving the start of that box to the start of where you have that smaller wedge drawn.
Oh, I get you. Let's see. Interesting. It's about the same spot.
Draw another one. Draw another one where you had it and see where the two lines show up.
For sure. Let's do that. And then stretch it back. Oh yeah, okay, we're a couple candles off.
Yeah, quite a bit. That's,
Yeah, that's like 12 hours.
but
So
if you're looking on a 4-hour chart, we're talking lots much bigger moves. We're not looking at the scalping those 5 or 10 pips. We're looking
no,
at major scalping.
this is a real position trade. This is something that could last.
That'd be more of a swing trade, probably with a little bit higher stop.
Yeah. Depending on what your potential entry is. Let's see. Same idea. I don't like 45. I don't know why I would do that. I find that okay to break that wick because I've got this rejection here, and then I have this clean one and this one here. So to me, that is acceptable. I never line this one up right, but here. It's amazing. It's amazing you can line this trend line up at the bottom and get these kind of hits. It still knocks me down sometimes. I just can't. So based on the overall price movement, it looks like this is still going up. So it could. I'm gonna put an alert here because that could be an interesting higher time frame trade. You see how it bounced. Here's the 1362 cross. We actually have a overall momentum or overall direction is down for the last little bit, but we've got a cross here. And we've got a gap between the moving averages. So I'd be kind of aware that you might not want to be taking that short as of yet. Would you be of the same opinion, Al?
I'm sorry, I had to step away for a second. Say it
Oh,
again.
you're fine. You're fine. I was saying just because we got the moving average cross here, right here, and then we have the separation of the moving averages, and as they separate, I would be very cautious about taking anything short here. Now, if I was watching this at time frame and I got that bounce, I would take that any day, but I'm not taking a trade here for a short because it could come back up here and it could keep on going up.
Let's take a look at what it looks like on a 5-minute chart. See where the moving averages are on that one.
Yeah. Oh yeah, look at that. So let's clean.
This looks like it had a fairly clean rejection off of that trend line. Or is that the way you drew the trend line?
No. Well, I lined up this one and this one, and then it gave me this hit. So that's
Okay.
that's a trade every day of the week. If you're entering on this candle up here, beautiful. But I'm not entering this trade down here after it's gone. What's that? 10 pips in my direction. This would be your 7 pip take profit, your 2% to your trading account. This little move here, which is pretty fantastic.
Excuse me, Matt. Beach Panda says, I had to step away for a moment, Matt. Are you using the Ichimoku?
Ichimoku, no, I am not. It just sounded super fancy. All it is Bollinger Bands on price. So this is a Bollinger Band on price, and this is the exponential moving averages.
Basically, I think what he's probably referring to is the shaded in areas, or basically just nothing more than the shaded in areas between the 5 and the 13 moving averages.
Bingo.
The red and green. I think that's what he's probably referring to with the Ikamuchu, which is it's a different indicator system. This is just showing where the moving averages, what direction the crossovers of the 5 and the 13, or the 13 and the 62 crossover, in which direction they're going.
And it gives you the visual distance between the 62 and price itself. So that's pretty. I just find it visually helpful.
He added,
There might.
thank you for explaining. The shaded area is what confused me.
Yeah.
Oh no, you're completely fine.
Yeah,
So
you know, a lot of people think those are the Ikamushu, but no, they're not.
yeah, I can't even say that word. I won't even try. Let's put it that way. Um, there might be a buy here, guys. If it bounces off this Bollinger Band, there might be a buy.
What's
If
the
we
price
can,
of that Bollinger? Where's the price? That's 72. We're in the Aussie.
72.96. What do you have on your charts? I'll see if we got something.
72.94. I have the 1562.
94.
Yeah, 72.94
Oh,
is right where we have the crossover of the 13, excuse me, the 15 and the 30 on the 15-minute chart have crossed over, and that's where the 15-minute 62 is lying right there at 72.94. So we could be getting a bounce off of that.
yeah, that's interesting.
But that's about six. That's only about 8 pips. So I would still be looking at this more of a bounce, more so than a.
That's a strong point. That's a
Yeah.
really strong point. We're wow. Look at the compliance on this line. It just knows where this line is. So it's not going to slice through there. You're going to have something here. Let's see what goes down. How far it goes. Let me see if I can. I was exploring with some things yesterday, Al. That's why my charts are a little bit different today. I was sorry, little guys in the other room.
Actually, we have an alert on the Euro US at 8:45.
Oh, 8:45. Let's do that.
Let's take a look at that one.
Yeah. I'll drive for a bit. Let me see here. So let's go 15. And then let's go 8:45. Oh yeah, look at that thing. That's nice. All right. Oh, that's the wrong line. Vertical line. All right. So let's throw up our wedge tool. So we'll go from the top to the bottom. Let me line it up now properly. Ooh. I moved the whole structure. All right, now let's go to the 5.
And it was a descending wedge.
Yep. Looks like a descending on my chart too. That's actually this is a nice wedge, guys. This is a nice wedge. Look for a bounce here. Look for a bounce in, where is it? Somewhere in this zone. So I'm going to make an alert here. So this is going to be, this has got potential, Al. So this is what I do is I throw alerts on the trend line and then I don't worry about it because then I don't miss the trade. So let's see what else we can do from a technical perspective. Oh, he's loud. He's happy.
No, he's fine.
Yeah, he's happy. Your mic's working finally.
Woohoo!
Yeah, he's happy for you
I
too.
sound like him. Both went hoo hoo.
Yeah.
Cute.
Oh, let's see. Hold on. Okay, now he'll probably be a little bit quieter. Oh, hold on. Oh yeah, and those Bollinger Bands is 34 as the setting, 34.2 I think. Um, so let's not use red. I don't like that. There's a W here. 1, 2, 3, 4. Big fat W. Let me see if I can make this add a little something. Not that one. And that one. Oh, that's so close. What's that? 2 pips away, Al?
Where are you at here?
Right up there, the A. The
Mhm.
A is 2 pips from this warning line up here.
This thing looks like there was a harmonic that was drawn. Looks like if we have a break of the bottom of the wedge where we're at right now, we could have a nice little trade dip to the downside.
Yeah, this could be another W look. 1, 2, 3, 4, 5, and then. So if that 5 ends up in this area where we drew this little box, you could have something real nice. And let's not talk about pitchforks too much. It's going to make it cloudy. But this is good. I like this. We're coming up.
While you're doing that, Beach Panda has a question.
Oh yeah.
Speaking of microphones, is there any particular flavor or brand you recommend? It seems my issues are the specific Zoom session we're on, as my system works well on all my other Zoom calls. So I think a sole microphone will do the job. Comments, suggestions.
All right. So the number one microphone out there right now is Blue Yeti, and I'm considering going to get one. But you don't need a very well. That's like $200, right? So that's a little
I use a
overkill.
I use a Sennheiser headset mic with just one earpiece and a boom mic. That's what I use. So
How do you spell that out?
a Sennheiser. Let me see if I can spell it here. Let me see if I can put it in the chat and see if I can spell it properly here.
I have one. I have the same one, Al.
Actually, you know what I use? I use my earbuds from my iPhone. I don't have my earbuds in my ears, but they're plugged into my hard drive. And obviously you guys can hear me, and the speakers just from my computer, I can hear you.
Huh.
And it's cheap.
Cheap, all right.
Cheap and
But
sharp. And it
yeah.
works. That's all I've ever used.
Yeah, that's a good workaround. Yeah, the Sennheiser microphone headset that I use is I think work paid like $100 for it or something.
I put it in. I typed it in the chat and Sennheiser in the chat.
Yeah.
Oh, okay.
Oh, I spelled it
Oh,
wrong.
actually, I need to. I think I got the panel. I need to get to everybody here. Hang on a second.
Yeah, it's a great. It's a great company. They make high quality products, and yeah, you're not buying. You're not buying the cheap stuff.
And I don't think it was overly expensive. I mean, it's probably like
Oh.
$60 or something like that. I think is what I paid for mine.
Yeah,
I could be. It's been a while since I bought it, but let me type it in again.
Yeah, we might have something here though. If this looks good, if we get a nice little bounce in this area. I don't know. I can't add an alert here, so yeah, that's how you spell it. Sounds more German than anything.
Actually, what I have here, I do have I did get a harmonic alert. Let me go and show my screen what
Yeah,
I've got.
yeah. Let me stop sharing mine. That's cool.
On the same pair, Alan?
On the same pair, yeah. And actually,
Oh,
it aligns up with the wedge too, which is kind of interesting.
Well, maybe maybe that's a harmonic wedge or something.
Well, I mean, harmonic patterns are basically wedges, but
Yeah.
the harmonic pattern came in like this. This is off a 30-minute chart, but this was a low.
Ooh.
This was a low around 5 o'clock yesterday morning. Came up to the high, which was this morning. Came back down. Here's the B, and here's the C, and then here's the target down here at 11770. That aligns almost perfectly with if I draw the harmonic on this one. Here's where the X was. Here's where the A was. Here's the B. Here's the C, where I have the D, and then the target is down here at
1770, way down
way
there.
down here, which aligns pretty closely with this trend line that I drew from a previous drawing that we had. It broke, and so right now if you draw from the X to the B on out, that right aligns with the B and the C. If this thing breaks, we're looking at the break to the downside into this area.
And
so
this,
I would
this
say
could
taking
be
this thing short as this is off the 15-minute.
so the what pattern is that? Is that a bat?
It's a I think
crab.
It's a let me see. I think it's the crab. Let me see.
a squish
Okay.
butterfly wing.
It's a bullish crab pattern.
Bullish crab. All right. So the percentage chance that it gets all the way down to the D is something. It's about 35%.
I would say this would be the more probable area, the 1821 area. If it breaks,
Yeah.
that's
If
still a pretty nice little trade there.
if
that breaks.
If it breaks there, you could put your stick, and that's 75% chance. So depending on your money management and how a person wants to play this, you could actually take out 50 to 75% of your lots in your trade at the length of the stick and let the other 25% run, and put a trailing stop and see how low she goes. But that's a little bit more advanced, and that doesn't, don't worry too much about that.
Okay, Beach Panda question. Euro USD has about 8 pips before it hits retracement. Should we look to go long before the bounce that we're waiting for, or is it just too premature?
Oh, I wouldn't look long on Euro US.
I would say, if anything, maybe look if you want to be real aggressive, maybe
You could take the bounce.
Take the bounce off of this. If he goes into here's the nice. If you look at this 15-minute candle, I would consider doing this. Here's the area that you're looking at for a trap.
Bingo. Very tight stop loss, though. You're going to use something like 3 or 4 pips just on the outside. You're going to go. You could do.
That will give you a 6 pip stop. If you could catch the spike inside where it tests the wedge, maybe break out a little bit. I would say no more than this area. If it comes up, breaks the wedge, comes up into here, you could use this for your stop. Use this for target. That's the 5 pip stop. And I would use that as sort of like a target shoe, or just bring this down to wherever this candle breaks into the wedge. The longer it goes this way, the more you're going to be bringing this down, which means the more stop, but you're going to want to have a little bit of room above where that C area is. So like right now, if it were to break, you'd be looking at a stop of about 11 pips, but right now you could probably bring it up a little bit more. Yeah, I'd probably do something like that. I'd probably use this whole area. If it comes up, wicks up in here, can't close inside that, just take, that'd be a target shoot. I call it target shooting. It comes in here, you trap the price, and then look for it to come down, and then look for it to come down and break. If it breaks, if you get in up here and you can bring it, it still gives you 19 pips to the bottom of the wedge. If it goes further, you got a really nice entry down to the bottom to where your demand zone is. That's a 59 pip move. This demand zone was formulated off the X of the yesterday's low, which is where the X where started with this harmonic pattern. Or you could just wait till it breaks the bottom and then but then you have to pretty much use the other side of the wedge as your stop area.
So this trade could be the trade of the week. Just FYI.
But
If you get
remember
in
today's
really tight.
Friday.
Oh
So,
yes,
so
I'm well aware.
you may not get that big of a move, or you may get, no, it's hard to say whether you get the really big moves on Friday as they take profits and close out their positions for the day also near the end of the week, or if, I would say this be probably a good trade to maybe take, if you do take it and it doesn't come, it could just stay very well range bound, but this still might be a good trade to take overall. But
Yeah,
you
you can still get your 10 pips to the bottom of that if you get a nice rejection from that trend line. So we're getting close to something happening. So let's see how this is gonna play out. But I tell you what, I am absolutely taking this trade. So whatever goes on, I'm in there because this is a very nice setup.
I'd be happy with 5 pips, but
Oh,
the
you be
VT indicator is causing my heart to race. So I'll wait for the bounce when it happens to go short.
Yeah, or if it breaks out of the top, it goes long. Remember where my other line was. But I like this setup. Let's put it that way.
Yeah, I like this one myself too. I like this one.
Here, look, you got a cross there. It broke through the 30-minute 62. So we're going up. We're going up. You see, you have that cross, and then you have the impulsive break up.
Now with this wedge alert being right here, I mean, I don't know the fact that one thing I like about this, where you had the alert, now you have the crossover of you had the cross. This is the 30-minute 62. You had the cross, came back, retested, cross, retested. It's sort of based right in here. Now we have the crossover of these moving averages, where you have the green, the 5, the 13, and the 62. Now you're coming up. Once you had that cross right around here where it consolidated, this would be the target to the upside. But how much room do you have to that after you had the confirmation of the cross, which would be here to maybe up here? See, that's only 7 pips. That's not a whole lot. But if it comes up here to where into the trap area, if it comes up here, test this, you could take the trade on the tag of this
Pedro
trend
said,
line.
I think the USD JPY may be breaking to the downside.
USD JPY.
Yeah, I'm sticking to this though, just because we're so close. We're like,
Well, this has a couple. Maybe we could take a look at that one here real quick.
yeah, I'll keep my eyes on this one because I like this one. I'm a little bit biased.
There we go.
Pedro, fantastic. Good job. Well done, sir. So US is losing, right? Right now. Yeah. US lost a lot of strength.
Yep.
So that makes sense. That might be a good trade, Pedro.
Is that the USD JPY, Pedro? Or that was the Euro US?
No, that was your US JPY that he was talking about.
Here's the break. It's coming right down into this area.
Get ready. Aussie US getting ready to hit that trend line.
Aussie US, see what that one looks like. Dollar weakness.
Be a 9 o'clock fake out though.
So this could be where they say enter the close. When I talk about enter the close, not to go long, but to go, or not to go short, but to go long. You can see it tagged it right in here. Couldn't hold it. It did break. Now we're on a 5-minute chart here. So it did. Here's where the C was. Here's our anchor. Here's our hit. It just broke that, but now it's coming in. Now, can it break the bottom of where this A is? That's where the question is. And the range we have from this break right here to here is only 3 pips. That's only a 3 pip range. These are all the way down here at the bottom now. This is down to the 75. Here is the alert. This thing's down at the 75. The 8 period RSI is down here. I would be more apt to take it long at this point and use my stop real close to the bot, right? Use my stop right on the other side of this, a few pips on the other side. But let me try that here if I can get into it.
We're getting real close to the top of that wedge, Al.
On the which one?
Aussie. Oh, Aussie, Euro.
Yeah.
Whoops. Why was I on Aussie?
That was
Anyway.
all before it. Maybe.
I don't know. Anyway, we're still really close to that wedge. And yeah, I'm taking this one right now, even though it came short. So I'm gonna do
You're talking about the Aussie, Matt?
no, the Euro
US.
USD, yeah. Because I'm putting 1/1875. So my
We had this up here, the 75%. This is on the 1 minute. Let's see where it is on the 15. The 15 is not coming out. It's still up here. It's still not quite out of the 60% range on the 15. It's not quite to the 75 on this one. It did have a strong rejection off this 5-minute candle. And that was at 73 to right now 70. So that's only a 3 pip rejection there. But that's if this 5-minute candle closes, you could probably put it right to the, put your stop at the other side of the wedge. I'd like to see the crossover of these moving averages
before you take it, yeah.
before I take it off the rejection.
Let's see.
Now with this one, you probably could do a sell stop. Sell stop right below this. Let's see, that'd be right around 1869. I'd like to move it down just a little bit below here. That way, if it comes on up and tags a little bit more, then we can just slide this thing up the entry a little bit more. Actually, we did get filled, right? We just got filled here.
Boom.
And so the target's gonna be pretty much down here at the. This would be a real. This is, you could go for just your 7 pips, or you could go for the 1850. 1850. That's still 1850. 1860.
Right.
So if I go to protect target, it'd be 1860.
So it's all about what you wanna achieve and what your targets are, right?
Yeah, that would be 13. That would be 9 pips. Or you could look at the 62. If you go to the 62, that would give you, that's only 5 pips to the 62. I still like it a little bit better, down a little bit lower. I think it's going to retest the bottom of this This is the one that we were talking about where we could have that harmonic.
Yeah.
I would
that-
expect it. I would expect it to come down here and at least test that area. And that's a 12 pip. That's a nice little target range. That
Let's
puts
see.
us right down to the bottom of these of this nice little rejection off of the wick. And then the
Yeah.
stop's going to be at the other side of this wedge. I'm going to put it at the other side of this area. I'll put it where the C. Take a look at where the C is. I'm going to move this over to.
Oh yeah, mine was a little tighter than that, so I'm not gonna. I'm gonna modify mine. I like your stop at 78.
1878. Yep.
Yeah, mine was at 76, but I screened out the C, so the C is gonna. I'll take an extra 2 pip loss to cover that potential high there.
Yeah, just a couple pips above that.
Because if it's gonna break, then it's gonna either break really aggressively or it's probably gonna bounce off there and just fire down. So we'll see.
So I think there's a good chance it's going to come up into this. You see the right here where this wedge, where these are consolidating, it's right here at the top of where the body of this red candle where the C was made.
All right, get ready, boys and girls. It's forming another little wedge there at the top of the wedge. So on the 1
The other
minute.
thing to look at is the yen trade where remember I said I wanted to, like taking it long down here. I got in and now it's coming back up to, and we'll see what happens here. This is where I saw that we had all the RSIs were down low. I liked where this RSI was when it came down into this zone and was able to take the trade. Right now I'm profitable on that one. Where this one goes, who knows? But that's what I was looking at with that. And I should put a target in somewhere. I'll probably put a target in up here at the 103.81. Text, take profit, 103.81. Let's see how many pips that is. That's only 3 pips. I like to go a little bit more than that. Let's go for 7 pips. 103.84. That is pretty much at the top of where this, that pretty much pushes right near that 30-minute 62.
All right, so here's that Euro US. It's pumping up a little bit. So that Bollinger Band is actually gonna be potentially where the wedge, where that trend line is, and 62 might be there at the same time. If all of those things converge at once, I'd probably be willing to hold on to this trade for a little bit. There's just really, honestly, too much in this one little 5 to 10 pip zone. There's too much going on.
I'll see if I can take another entry. I don't know if it'll let me do it around 1876.
Oh, that's on Euro US. Huh? Oh, someone messaged the chat. What's I didn't saw from the corner of my eye.
I still think it's going down. Let's see.
Oh,
I didn't
for
know it's 20
UJ?
cents. I don't know
Yeah,
which one he meant. That's why I
UJ.
asked. Okay.
Yeah.
I don't know if this
Yeah.
will let me. I don't know if this will allow me to take the trade here, but we'll see. I'll do a sell limit up there at 1876.
Yes, UJ Matt.
Yeah, because I remember you asked if that looks like a good setup.
Matt,
Looks like we're coming up to the top of the wedge. Come on, man.
he's talking to it now. Everybody.
Yeah. I don't know about you. Need to put some pips in the
Move this
bank.
just a little bit out of the way here.
Good way to end the day, the week,
The
trading week.
Yeah.
Man, oh man. If it breaks to 62, I might put another position. If it breaks to 62 on the way down, depending.
Remember, this was the line for the, where actually this is where the entry would have been off that harmonic to enter it off of this, close off of this trend line right down here, which is basically the bottom of our wedge. So this is why we're looking at, and this C could end up going
This
a
would
lot.
be early, yeah.
This is a very aggressive early entry for that downward move. But the fact the C has been formed, oftentimes the C might still end up moving, so it still could go up higher. But this is a good area that if it comes up here and it holds, you got a really nice entry. If not, your stop is very, very small.
Last time I checked, Al, D's like to move, but the C, if the C moves, the pattern fails.
That may be, I'm not sure if that's the methodology, but I can see where that would be something to consider.
Yeah, because I've traded enough of these harmonic patterns that where the C's gonna paint, it's gonna be good, and then you come back and you see, oh yeah, it's gone. Well, if the C moves, that means the relationship between the Fibonacci, so the B, the C, the A, the X, if that's off at all, the pattern's no longer valid. And so the swing's still valid and the wedge is still valid, but the harmonic pattern's not valid anymore. But I'll have to double check that. That's just something that was coming through my head, so I don't know. Let me look that up right now, actually.
Okay.
Because there's not a lot of scanners that are going to give you the C on a harmonic pattern. I think the only one is that one that you were using. Really taking its sweet time here at the top of the wedge.
Go back to the US yen trade that we took earlier. As here is the bounce, entered it here, and right now it's back up into the wedge, and we'll see what happens with the crossover.
Moving
Only up a little
averages
bit.
seem to be going down, no?
Here's my target up here still, but pretty much trying to get the target of the, and I say if it comes back down and retests this, then we may just want to take a break even or a small loss on this one. If it comes back down and retests this, I would be probably willing to get out of it anyway. So this only gives me like a 2-pip stop, 2-pip loss on this. What this might do is come down, retest the wedge, and keep on going up as we get some crossing over, or this may just stay in a range. This was a strong rejection up here. Now we'll see if this thing breaks again. Well, we'll see. We'll see what happens. The worst case scenario is I lose $1. Back
Hey,
to
a
the,
dollar's not that bad, Al.
well, it's just it's a we're swinging the bat. We're just trying to get in at it. I'd rather get in at a low off of potential bounce as opposed to try and catch a breakout. I don't find breakouts working very well overall. That's one reason why I think we've been getting stopped out a lot with some of these wedge breaks, is because those are really breakout trades. And if they break out and they continue, it's a nice trade, but oftentimes it's just a breakout just as a head fake. Now this one still hasn't really come up here to retest this. That's why I kind of like this entry up here.
I keep on going back to GU. I don't know what's going on with my computer. Maybe it's giving me a sign or something. Euro US broke trend line.
And we're coming up on the 930.
All right, we're in the box.
Actually, I move this down to the right in there. Let's see, we're about 5 minutes away from the market open. And let's see what this 1 minute chart looks like on this. You see, we're starting to get it keeps on coming back down, retesting this 5 period moving average, keeps testing this yellow. Like I said, oftentimes, like I said, I like to see a crossover and break, have the green and the yellow crossover. Perhaps even have a little bit more consolidation of the 62 coming on up. And this might be that strong move up to come in to get everybody sucked into taking it along the breakout and then reversing back out. Here's a crossover, here's a rejection.
That's a big wick, Al.
Yeah.
but
That's
we're still forming that 1 minute wedge. So
I'm still looking for this little crossover right in here. It just come up. It did tag the trend line.
mm-hmm.
We are now getting the crossover. We did have this extreme up here on the 1 minute. No, I think we actually got it on the 15 as well. No, this one's just coming out. We did get it on the 5 minute.
Yeah.
Pretty close. Now, if this thing crosses over, now we could be on the downside here.
Let's see.
Because I had my target by entry right here, right on the target, but it didn't get filled yet. That doesn't mean it won't. This will be a critical point right here. Is will this green, the five period cross and close below the yellow. They rejected it here. They rejected it here. The yellow is still in command. Now we have the cross and close below. And here we're going to start getting this thing's going to start turning over and probably retest down here. This will be right about where I got in on this breakout, where it just tagged me just before it went on up.
I don't. The only thing I don't like about this, Al, is that we have those big wick rejections on the 5 minute, and it's not just one wick. It's kind of like a couple wicks. Usually, I'd like to have just one clean wick, not more. Because if you have a whole bunch, that means there's generally indecision. There's too much indecision. You see the big wicks that are coming out of both ends, and the candles are real small.
The bodies are real small.
Yeah, that means like there's people are fighting. They don't.
Well, it was near the extreme is what it was. People want to break out, is to try and break people out, bring it in. I think this one's going to go. I think it's going to go short.
I do too. Odds are in our favor. We are getting in like 10 pips early. If you're considering taking the trade to the short side at the wedge break on Euro US, then we're 10 pips early, which means it could put an extra 2% in your trading account. Well, we'll know soon enough, Al, because it's not going to sit where it is for very long.
No. Like I said, if we do get filled, I mean, right now I am in it here, but if we do get filled into this little trap zone, you have a very tight stop off of a relatively strong harmonic.
Yeah, and that's a pretty big trade.
And it's like if that's the area holds, at the very least, it should come down, at least retest this trend line, and that's still going to be a nice little trade from.
But even from
there to here, that's still 16 pips. That's still a nice little trade right there.
Even from a higher time frame perspective, if you're entering with a 5 to 10 pip stop loss, I'm using 10 pips because my entry wasn't great. I was a little excited, to say the least, so I got in a little early. But if we did, your risk to reward is something like 6 to 1 or 1 to 6. I don't know what way around it, but you had measured out about 60 pips, right?
Yeah. Well, yeah. It was to the target zone. You're saying?
Yeah.
Yeah, that was about. I think it was 60 pips. I think. I just say from up here to. Yeah, this was 60 pips down. And that was to my zone. That was basically pretty much based off of the stick of the wedge.
Oh yeah, that wasn't even the end zone. We were talking what 125 pips is what my
it was
target
all the way
was.
down. It was all the way down 1770, which is right down here. Pretty much right down in this area.
So we're taking potentially a 30 or 1 hour trade off of a 5 minute chart with a 5 to 10 pip stop loss.
That's pretty much what we're doing here.
Yeah. Okay.
And so if this thing goes short, I'll just keep it until it gets down into this. It could very well, it's not out of the ordinary for it to come down within today's price range. Has pretty much all day to do this. And from here to where it is right now, time-wise, from the low, that was only that's only 1 hour. It took 1 hour for it to get from here to up here. That's only 60 bars. So it could take another hour for it to get back down to this area, and it could go lower as the day progresses, but I do like this trade.
I've seen some people, they're so funny, eh? They'll take like 10 positions on the same trade. And then they say, "Oh yeah, I'm a great trader," or whatever. I'm like, well, you just blew your money management right out of the water. You know, you see those screenshots with like 5-10 trades, and they're all about 5 pips away from each other on their entry, all on the same currency pair. Ay, ay, ay.
And the market is now open, and we should be just about done for the day.
Let's see. Let's see, Al. Because this, if we get stopped out here, this doesn't bother me whatsoever. This is a good stop out. Let's put it that way. Sometimes you get stopped out and it's foolish, but this is good.
Excuse me, gentlemen.
Hi.
Hi. I have on my participants, there's a hand up. But
Yeah, I saw
don't
that
know
too.
Who it is. Does any on your screen does it say who it may be?
Yeah, it's Pedro. Hi, Pedro.
Okay.
We've had it up the whole time.
Yeah.
I know it's been up for a while. I just didn't know who it was, and
Yeah,
I didn't know how to get it down.
All good.
he got it down.
Here. Okay, great. My bad. Sorry.
You're fine.
No
You're
problem,
fine.
Pedro.
Yeah.
No problema.
And on that note, I think what we'll do is we're going to wrap this thing up for the day, and have a good weekend, everybody.
Have a
Stay
good weekend,
green.
all.
Keep an eye on this trade. Keep an eye on this Euro US trade. I think it's going to be a good one. And with that, everybody have a safe weekend. We'll see you on Monday. Thanks for coming
Have a
in.
great
Monday.
Have a great weekend. God bless.